Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, February 6th. Hope you guys having a great morning so far today. We do, however, got a few economic data to go over, so we'll just jump right into it. Today is basically day two of jobs numbers. Yesterday we had the ADP. Today, as we get every Thursday, is the weekly jobless claims. And then tomorrow we'll get the Bureau of Labor Statistics numbers, which will be the big report we're looking for. Now, in weekly jobless claims, of course, we're looking for lower numbers, primarily because that means less people are applying for unemployment. So people are out there looking for work. Last week's report, these are always in arrears, was at 217,000 people applying for unemployment. Forecasts were calling for this week's report at 215,000 and only 202,000. So very good report here, which could set up for tomorrow. We had a very strong ADP number, and then we got a strong weekly jobless claims. Could set up for a very strong BLS report coming in tomorrow. The forecasts are calling for in the 150,000 range. So we'll have to kind of see if what transpires from that. So it'll be interesting to see. To move on here, we got the productivity Q4. The previous report came out at a drop of 0.2%. Forecasts were calling for 1.6%, and it came in slightly under at 1.4%. Then we got unit labor costs for the fourth quarter, and the previous report came out at 2.5%. Forecast calling for 1.6, and it came in lower than that, 1.4%. So let's look ahead here to the headline news. Stocks are up. They do obviously like the job numbers that came out here, but also what's kicking in is we just signed a few weeks ago the phase one with China, and they just announced that they're implementing it. So China will be cutting in half their tariffs on the U.S., and then of course the U.S. will be doing the same, effective February 14th. So basically Valentine's Day, that is the tariffs will kick in. A reduction in tariffs will be kicking in. So they are hoping that they can help stimulate each other's economy, especially with the coronavirus affecting China's productivity. So there's concern on that as well. But right now, stocks are up based on that. So let's see how this is playing on the bond market. Bond market's doing okay. We've been kind of holding tight after the stock market's been pretty hot this week. We did have a little bit of a drop, as you can see here, but however, these last 3 days we've been kind of in the same pattern here. And right now, as you can see, these little wicks on both sides, it's kind of showing some uncertainty of which direction to go. Now, if we have a strong jobs number, it could go further down, so we'll have to want to watch this. And as you can see, yesterday we did test this floor of support. Let's kind of see how we close out today and play out, but be cautious as to the possibility of a strong jobs report and maybe the stock market heating up, and that could take money from the bond market. Now, I think what's kind of helping the bond market a little bit is that, with the spike in the stocks, is that these big hedge fund guys, they have to, because the valuations of their portfolios, they usually keep a certain percentage of their risks. So that way they're not holding the bag with too much risk. So when you get in, stocks are more risky, and then we got mortgage-backed securities bonds are less risk. So what happens is when you get too much of one, they have to do a balancing of their portfolio, and a lot of times I think that's what's kind of helping with the bond market, where they're so that's why you're still seeing bond market kind of going up at the same time as stocks, when typically it's adverse, so it's one or the other. But we're starting to uh, see it happen on both sides, where both of them are going up or down, and a lot of it has to do with them having to readjust their portfolios and buying into the bond market to uh, keep those percentages intact. So that's kind of helping us out right now. So let's take a look at the yields. Yields are kind of the same thing. As you can see, it's creating some uncertainty here. This little wick. We're at about the 1.65 range right now, and that's kind of where we stopped. As you can see here, we did kind of briefly touch the ceiling here, and we're kind of waiting to see what happens next. So again, we'll wait till close, but again, heading into tomorrow's jobs numbers, it could be hot, and could mortgage rates could worsen. But right now, mortgage rates are unchanged from where we left off yesterday. So I would stick with right now. Mortgage pricing for mortgage rates are the same as what we saw yesterday. All right, so that's pretty much the wrap. If you guys are in California, like to buy or refinance, please reach out. Love to be able to talk to you guys about your scenario. You can direct message me or email me. Email will be the quickest response. However, we got a lot of different loan programs out there and helped out many different scenarios, from helping people with their retirement planning to college planning to different things of basically what we do is we look at structuring their debt in a way so that way they can obtain those other goals in their life. All right, folks, you guys have a great rest of your day. Thanks so much for watching. We'll look forward to see you guys in tomorrow's report. Bye-bye.